Before you even look at a house, you need to do this. Hi, my name is Justino with the JDZ Luxury team with KW Realty, and I'm gonna give you 8 steps you need to do first before even starting to search for a home. If you skip these steps, you might still get approved for a loan, but end up with a payment or a loan structure you don't actually want. So let's break it down right now. Step number 1, evaluate your financial health. The first thing you need to do is look at your finances. Write down your income, your monthly expenses, and any debt payments you have. Then calculate your debt to income ratio. It's just your total monthly debt divided by your monthly income. For example, if you make $6,000 a month and you have $1,800 in debt, that's a 30% ratio. That's good. But if your debts are closer to $3,000, that's 50%. And now lenders push you towards loan options you might not want. So know your numbers, don't guess. Step number 2, create a budget. Just because a bank says you can afford $500,000 home doesn't mean you will want to spend that much. Ask yourself, what's a payment you can live with comfortably? Because over the next 30 years, you will still want to save for retirement, go on vacations, and be prepared for emergencies. Your budget should include more than just the mortgage. Think about property taxes, insurance, HOA fees, and regular maintenance. A good rule of thumb is to plan to set aside about 1% of the home's value each year for repairs and maintenance. Step number 3, check your credit score. Your credit score is a huge deal. It doesn't just decide if you get approved or not. It decides how much you'll pay every month. 2 people could buy the same $300,000 home. One has great credit, the other has okay credit. The difference in their monthly payment could be $300 or more for the exact same house. The lender you choose to work with will start this process and will be able to tell you accurate scores, which may differ from what you actually see on credit score websites. So keep that in mind. Step number 4, pre-qualification or proof of funds. Here's something most buyers don't realize. Many homes will not even let a realtor schedule a showing unless you already have a pre-qualification letter from a lender. That letter shows the seller you've spoken with a lender and you're financially capable of buying. It's your ticket in the front door. This wasn't always like this, but after COVID, this became a kind of standard in most homes here in Central Florida. So if you're planning to buy with cash, you'll need what's called proof of funds instead. That's usually a bank statement or account verification that shows you really do have the money to buy. So whether it's financing or cash, this step always comes first if you want to access some homes to look at. Step number 5, save for a down payment. Here's a myth. You need 20% to buy a home. Not true. FHA loans can be as low as 3 or 4%. VA loans or USDA loans can be 0 if you qualify. Conventional loans often range from 5 to 20%. The important part is knowing what loan program you're going to use. So you'll know exactly how much to set aside, which is why doing step number 4 before searching for a home is so important. Step number 6, plan for closing costs. Now, this is the step that a lot of buyers forget about. Closing costs usually run between 2 and 5% of the price of the home. On a $300,000 house, that could be anywhere from $6,000 to $15,000. This includes things like the appraisal, the inspection, the title search, title insurance, and sometimes even attorney or escrow fees. Plan for it now so you're not surprised at the finish line. Step number 7, explore mortgage options. Not all loans are the same. Some have lower down payments but higher insurance. Others have stricter requirements but lower long-term costs. If you don't compare loan programs ahead of time, you might end up with a loan you don't like just because it was the only one left on the table to choose. That's why getting pre-approved early is so important. You can have these discussions with your lender. He or she may be able to present a loan type or a government program you didn't even know existed. So, before we get into the final step, if you are enjoying this video, do me a favor. Please support me by subscribing to my channel and hit the notification bell to be notified for any new updated videos that can help you out with information regarding real estate. And please don't forget to like the video and comment below. Let me know any questions you have. I'll be more than happy to answer them. Now, last but not least, step number 8, research the market. Don't just focus on the house. Look at the neighborhood. What are the schools like? What is the commute time? Is the area growing or declining? A great house in the wrong location can be a bad investment, which is where a professional realtor who specializes in that specific local market comes in really handy. We can give you full reports on the area, values, and also pull a CMA on the home you're trying to purchase to make sure you're not overpaying. So there are 8 steps you need to do before you even think about shopping for a house. Number 1, check your finances. 2, build your budget. Number 3, check your credit score. And 4, a pre-qualification letter or proof of funds in advance. Number 5, save for your down payment. Number 6, plan for the closing costs. Number 7, explore loan options. And number 8, research the market. If you do these first, you will be in control and you won't get stuck with a loan or a payment you'll regret.